Welcome, everyone. I'm Angelo Robles, host of the Angelo Robles podcast and the founder at Family Office Association. Today, we're covering how to position yourself as an investor as the energy crisis unfolds. It features two great guests, Leigh Goehring and Adam Rosencwajg. They're founders of Goehring and Rosencwajg. Before we begin, I would like to give a special shout out to David Talbot and the whole team at Accordia, our data integration technology partners, for arranging today's great speakers. The energy crisis discussion is again aligned with our series on decarbonization blog post, which we've been active with as well. So why don't I start? Leigh and Adam, welcome to the show.
And thank you, Angelo, for having us. We're looking forward to speaking today.
You're very kind. Thank you, Leigh. It's a pleasure to have you both on. Why don't we get right to it? How would you characterize energy policy in the US and Europe and how it has contributed to the emerging energy crisis?
Well, I'll start off with answering that question is that I would broadly characterize both policies in Europe and in the U.S. as misguided. And how misguided? Well, just look at this. I mean, obviously, when Biden began his administration, one of their first policies was to announce how hostile they were going to be to the hydrocarbon business in the United States, whether it be canceling the Keystone Pipeline, right, from almost day one, to banning the permitting of federal land, just a general discouragement of investment in the North American hydrocarbon business. And literally here we are 9 months later, and we're not once, but twice, we've gone to OPEC, cup in hand, knocking on their door, literally begging for them to pump more oil. So I can't describe a more policy more misguided than that. And in Europe, their policies are more complicated. What they've decided to do is that they've decided to dismantle large parts of their traditional electric generating capability. You know, for example, in Germany, they used to have 26 nuclear power plants. Mind you, every one of those power plants was producing very large quantities of electricity with zero carbon output. They decided to dismantle, decommission, and they're just about done with the process right now. So in the next couple of years, they will generate no power from nuclear power, mind you, carbon free. And they decided to replace it with wind and solar, which now are not operating at the levels that or the efficiencies that they thought. So what are they doing? They're burning a lot more natural gas and they're burning a lot more coal. So how misguided can you get?
Yeah, it's a very good point. Adam, do you have something to add to that?
Yeah, I would. You know, I think in a big picture sense, the last sort of 10 to 15 years, I think the big policy error has been this huge push towards renewables without understanding a lot of the limitations and problems in those technologies. And the limitations and problems really come down to the idea that they're not base load sources of power. So they don't generate electricity on a sustained basis the same way as a gas plant would or a coal plant would or a nuclear power plant would. Now, the debate as to how much CO2 we would actually save if we went to wind and solar is a really interesting question, because there's a lot of research suggesting that because they're so energy inefficient, we'd have to build so many of them that we wouldn't actually get a lot of the CO2 savings. But leaving that aside for a minute, I think presumably the reason these governments have been pushing a wind and solar mandate has been to reduce carbon emissions. But it's neglected the fact that, you know, there's a huge Achilles heel to wind and solar, and that is the fact that they're intermittent. And for whatever reason, we've just wanted to sweep that under the rug for the last 10 years. We've put in place policies and incentives to push capital away from oil and gas and towards renewables. And now we're up to a point where renewables in some markets are providing a great enough share of the market for power there that it's becoming very destabilizing. So I think that that's really been the major policy issues. You've been pushing people towards something despite the fact that it has these severe limitations. And you've been really disincentivizing capital through a whole variety of ways, some overt and some a little bit more subtle, from investing in the traditional upstream E&P business. And that's starting to have implications now to supply.
Excellent. Your research frequently refers to the fundamental laws of thermodynamics. Help our viewers understand some of the contradictions between science, policy, and implementation.
You want to handle that one, Adam, to start? That's a complicated one.
Sure, I'll start. Look, without getting too in the weeds and too dry and technical, at the end of the day, various sources of power have a certain amount of embedded energy in them. So if you look at something like natural gas, or you look at something like coal, there's a certain amount of energy inherent in that unit, million cubic feet or ton of coal. And we ignite that, we help liberate that energy by burning it. And we then try to use the energy that is then released, in this case from heat, to do certain functional tasks, notably to turn and spin a big electricity generating turbine and dispatch electricity. So there's a lot of realities that become very difficult to get around. When you look at how much energy is contained in a ton of coal, I mean, that is the amount of energy that's contained in that ton of coal. Same thing with 1,000 cubic feet of natural gas. When you look at wind and solar, you have to deal with the idea of how much energy is actually passing through the wind turbines and the wind blades, and how much can be captured and converted into usable electricity, compared with how much energy is required to make that wind turbine itself, which consists of cement and steel and carbon fiber, and all of those things consume energy. And what nobody really wants to admit is that if we're operating in a fossil fueled based energy system, which is to say we're burning coal or we're burning natural gas and creating electricity, for every unit of energy that you put into that system, either mining the coal, building the power plants, what have you, you get 30 usable units of energy out the other side. And when you move towards renewables, that drops to, could be as low as 3 to 1, could be in some cases as low as 1 to 1. And people just have to acknowledge that when they're doing the calculus and making decisions about how much renewable are we willing to accept and what implications that's going to have to our economic development and growth. There's been this huge myth that we can go green, and by green, people mean wind and solar, that's going to create jobs, create surplus capital, and create a huge amount of economic growth. And unfortunately, that's not true. It's not possible.
Yeah, that's one of the things that we have completely we don't understand, is that that the amount of energy that's needed to create further energy. And as Adam said, one of the things about hydrocarbons is that whether they be oil, natural gas, or coal, is that you take, it's just an interesting, such a fascinating statistic. You take 1 unit of energy, you put it in there to mine it, to produce it, to transport it, and burn it, and 30 units of energy come out the other side. And the thing is with renewables, that whole energy efficiency is just so much less. And people, you keep the press, harps on this idea the cost of renewables keeps coming down, and that's obviously your variable cost in the actual making of it. But that what's not coming down is the energy investment cost that's needed to go in, and a lot of that is inherent in the systems, and we can't overcome that. And there's huge implications, as Adam said, is that what's going to happen is ultimately we're not going to be able to go in the directions that we want. Those directions are reduce CO2 levels at the same time as as the popular press, including the popular investment press, says, to produce high quality, high paying jobs that produce cheap energy. It's just not going to happen.
Your work recently highlighted how the so-called super major oil companies have been shrinking from their former greatness. Describe how this has happened and what presence of activist investors like Engine Number One and Third Point may mean for the future of these companies.
Well, as we pointed out in those essays, the future of the super majors or the major international oil companies is dire, and this is even before they became subject to this very intense ESG pressure. The you can argue about what are the reasons for this. It could be geological reasons that we just don't have access to huge amounts of potential new oil and gas reserves to be discovered, or they're just not spending enough capital. But ever since a decade ago in 2010, all these companies are not spending enough to either replace their reserves, replace their production with new reserves, and with the result that their production is beginning to decline. Now, the fact that those phenomenons are going to become a lot more intense because of the various ESG pressures. And of course, the ESG pressures first emerged in Exxon with the emergence of an activist shareholder group, Engine Number One, who, by owning 0.02% of the stock, were able to replace 25% of Exxon's board of directors. And already they are advocating for further declines in Exxon's upstream business. For example, there's rumors out that they're agitating, the board is now agitating for the cancellations of two massive natural gas projects. The one in Mozambique, the LNG Mozambique project, and the big natural gas field off of Vietnam. And both of those have ironic consequences. We'll unintended consequences. We'll talk about in a second. Second, Shell. First is a Dutch court ruled that Royal Dutch was in violation of various laws by not following the Paris Climate Accords, and that had to significantly reduce their CO2 output to be compliant by 2030. And if that wasn't enough problem, that they too now have the emergence of an activist shareholder who is now agitating for the breakup of the company and significant further reductions in their upstream business. And I should point out that Royal Dutch's upstream business is already in severe decline since long before any ESG pressures were put upon them, and those further decline will obviously accelerate going forward in the future. And finally, Chevron, Engine Number One, has met with the senior management of Chevron. We don't know what they talked about, but there is some evidence Engine Number One is mounting some sort of campaign similar to what they did for getting themselves on the board, as they did with Exxon. So the super majors, they're under investing in their upstream businesses. Their replacement of their production with new reserves has already gone into decline, and their production is now following. And you throw in the ESG pressures on top of that, and it's the end of the super major, the international oil companies as we know it.
Wow, that's the end of the super major oil as we know it. Adam, would you have something to add with that, or completely concur with Leigh?
Well, I certainly completely concur with Leigh, and I think that people need to understand that the big success in the last 10 years has all come from the U.S. and it's all come from the shale basins in the U.S. and that's really been the domain of the small independent E&Ps. But the super majors are critically important when we look at oil supply outside of the U.S. and when we look at natural gas supply on a global basis. These big LNG projects, these big offshore oil finds off either in Brazil and off of Africa and the North Sea, things like that. I mean, that's all dominated by large super major oil. And so what I think is so fascinating is when you start to look through the numbers on what people are expecting for non-OPEC production outside of the United States, this cuts right to the heart of that. This is really going to decimate and cut into the flesh here cut into muscle of that non-OPEC ex-US production. And that's going to be really important because everyone's been paying attention to the shales for 10 years. No one realizes that entire non-shale rest of world number has been under a lot of stress to begin with. And now this, I think, is the last nail in the coffin for that.
Somehow I got put on mute. Much has been written about an impending shortage of copper for electrification. How can you help our viewers understand why this is happening and try to explain how markets might navigate the perceived shortfall?
Well, one of we've been on top of this issue for a long time. And the issue that I'm referring to is the underlying depletion in the global copper business. Obviously in the starting in the late 1970s into the 1980s, there was a huge expansion that took place in global copper business, and expansion revolved around several different very interesting factors. One was the introduction of a new technology, SXEW extraction methods, which actually allowed for the first time the low-cost extraction of copper from ore that had been oxidized or that had been had exposure to oxygen over time. And that was able to bring on a whole new source of supply because we had all these oxide deposits throughout the whole world. We knew where they were, except we just didn't have the technology to extract the copper from them. So, and the other thing was the liberalization of the Chilean copper business that started in the mid to late 1970s, and the discovering of these a number of massive new mines, Escondida, Collahuasi, Quebrada Blanca, things like that. And so the thing is that by the early 1990s, you had a global copper business where all the mines are huge amounts of the mining base was brand new, and depletion was not an issue. Then what started to happen is we stopped discovering the new mines, and we started to basically age our mines that we were mining. They were getting older and older, and we were being forced to mine lower and lower grade copper. You mine your best copper grades first. Now, this is a trend that's been going on for a very, very long time, and it's getting much, much more severe because we're just not bringing on a bunch of brand new mines like we did in all the way through the 1980s and into the 1990s. So the thing is that the underlying depletion of the copper business is now basically beginning to eat into any new mine supply that's coming on. So the thing is that it's going to be very impossible for copper supply to grow at all this decade, and at the same time, the growth is going to be very difficult to attain. We've already entered into a period of very, very strong copper demand, driven by a number of forces. And we could talk about what those forces are.
Yeah, and I think that was incredibly helpful on the supply side, and on the demand side, I think things are just as interesting. And I think, frankly, investors to date have probably spent more of their time focused on demand and less on supply. But what Leigh just talked about, I think, is going to be the most important thing in the copper markets going forward. We just don't have enough new projects coming online to offset depletion. On demand, there's really, I think, two major sources of copper demand that are not fully understood. The first has to do with emerging market copper demand. And that might sound a bit funny to say that's not well understood, since people have been talking about China for forever. But I think that people fundamentally are improperly estimating what drives copper demand, and they're improperly estimating how far China has yet to go. What I mean by that is that most people focus on how much copper gets consumed every year. And that's an interesting metric. It's very important. But what is ultimately more important is how much total copper has been installed into an economy. And the reason for that is that unlike energy, unlike oil or gas or grains, copper isn't consumed as such. It's really installed, and it persists. So it's like a capital stock, and it should be treated as a capital stock. And when you look at an economy of China's size versus how much copper has been installed, I think it has about 120 pounds per person installed. That eventually is expected to go to 250 pounds if China's ever going to get through its middle income trap, which finds itself, just at the early stages of right now. And so, that means that Chinese copper demand could easily go from 50% of world supply up to 75 or 80% of world supply over the next decade, just to get it where it needs to be, which is to say an economy that's about $15,000 in per capita GDP with about 225, 250 pounds of copper installed per person. And that's, people don't think like that. People look at demand, yearly demand. They say, oh, it's too high now. China's 60, 65, 70% of world demand. It's not 75% of the world GDP, so it's too high. But that's the wrong way to look at it. It needs to get to 250 pounds per person. Every economy that is that large, which is to say about $15,000 of per capita GDP, has 200 plus pounds of copper installed in it. You simply cannot run the economy without it. It's needed for all the electrical grids, for all the power, transformers, and substations. India hasn't even started its trajectory yet. India is where China was or should have been in 2003, but it's actually even below trend line there. And people say, oh, well, couldn't that be that they're just sort of skipping a few steps the same way as maybe these telecom companies never went to the wire line? But you can't really do that with copper because, again, you're talking about the electricity infrastructure. You're talking about things that really can't be replaced or kind of worked around. So there's going to be a huge secondary source of demand growth over the next decade coming from India. And nobody has that in their models. Nobody is anticipating much in the way of India. And I should point out on the oil market, they didn't either. And then within 18 months, India went from being something that no one paid attention to the second largest source of growth and the third largest line item in global oil balances, almost overnight. And I think the same thing could happen with copper, will happen. And then lastly, people just don't appreciate how unbelievably copper intensive renewable energy is. And the reason for that is that copper is used in electricity generating and electricity gathering systems in that, the last mile. So connecting a house to the power grid. But the same works in reverse. Connecting each of those individual solar panels and windmills into a central dispatch point is very copper intensive. And you don't have that when you have a large coal plant. You have one central plant and it dispatches the power out on its aluminum high tension power line. That's not what you do with a wind farm or a solar farm. So what we're starting to see already is that in countries like Germany and Spain that have had big renewable mandates, their demand trajectory looks nothing like countries like the United States or the UK or other parts of Europe that have had less, France, for instance, with less of a renewable mandate in place. So, if you want to go down this path, what it means is that copper demand is going to be extremely robust for the next decade.
Excellent tip, I guess you could say, from multiple perspectives. Many people are aware of lithium as a core input to battery manufacturing for electric vehicles and short-term storage needs. But what are lesser known battery minerals that may prove to be in short supply?
I'm going to let Adam. Adam is our battery expert. He's really, he knows the battery markets very well. So he can answer this question.
Well, I think that cobalt is probably the one that comes to people's minds the most. Basically lithium ion batteries, people talk about different chemistries, which means different chemical compositions of the batteries. And what they're really talking about is the anode and the cathode and the electrolyte and how to sort of tweak the materials that go into those three components. Every battery has an anode, a cathode, and an electrolyte. And to a certain extent, any group of metals can be used for any of those things. You can make a battery with any two metals that have a difference in charge to them. However, things are obviously more efficient than others. And when it's like a big game of whack-a-mole, when you start to dial one thing up, you get the other problem starts to come to the surface. Cobalt is used in most lithium-ion battery chemical compositions. And what it helps to do is it helps to reduce what's known as thermal runaway, which I don't know who coined that term, but I think I need to call their PR agent because thermal runaway is a euphemism for explosion. And the last company that tried to get cobalt out of batteries would have been Samsung with their phones that exploded in everyone's pockets. So cobalt, that's sort of a pinch point in lithium-ion battery chemistry supply, being engineered out all the time to greater or less successes in the past. The problem with cobalt from an investor's perspective, there's not a lot of great ways to play cobalt. Most of the world's cobalt comes from the DRC, and most of it comes from either as a co-product. There used to be a very good cobalt mine in the DRC called Tenke Fukuremi that used to be investable through a company called Lundin. That's been subsumed by Chinese parastatal state-owned enterprises and things of that nature. The rest are, again, this is another fantastic PR term, come from artisanal mines, which is a euphemism for illegal mines in the DRC. So there's not really a good way to invest in them. Nickel is probably, I think, the most interesting battery metal that people don't, some people think about, other people don't. And the reason I say that is that when you look at all the different battery chemistries going forward, and people are trying to dial this chemical down and that chemical down, and the various elements, but nickel tends to be the metal that you see most often through all the different formulations. So maybe the concentrations change a little bit, but I think probably nickel, you're fairly safe. Again, not very easy to play a pure nickel play. Leigh, I don't know, anything you want to add to that?
Yeah, the problem with nickel is on supply, because as opposed to the global copper industry, which has this underlying depletion problem and lack of new mines coming on as we progress through this decade, there's a lot of nickel in the world, and a lot of it's located in Indonesia. It's in the form what they call nickel laterite deposits, as opposed to nickel sulfide deposits, which is Sudbury up in Canada. And those laterite deposits are very easily mined and brought online. And if you go over for example, the last 20 years, about 50% of all world nickel supply growth comes from those Indonesian laterite deposits, and there's quite a few of them left. So nickel is, the demand side is good, but the supply side is not constrained, which is a little bit different than what's going on in copper.
And turning attention a little bit to, I guess I would call it soft commodities, does your firm invest directly in grains, or do you seek exposure through agricultural supply routes? And before answering that, perhaps you can discuss why rising protein diets and renewable fuel mandates might be both contributing to stronger demand for grains.
Yeah, we follow global agricultural markets very, very closely, and we do invest. We usually do not make our investments through the grains themselves, but we do through various ancillary businesses in the global agricultural markets. And I'll talk about what our favorite vehicle is in a second. But one of the we're just like about a year and a quarter ago, we went on record and we published a piece on what we call the emerging global energy crisis. We're also on record saying that we're on the verge of a global agricultural crisis, and in some ways they're interlinked, and I'll talk about that in a second. But one of the things is that we mentioned before about these emerging markets, and the fact of how most commodity analysts have really underestimated the amount of demand that have come from emerging markets. And that's because as they get richer, various intensities of commodity consumptions goes up tremendously. Oil is the classic case, electricity is another case, but there's probably no more market that's influenced that than global grain markets through protein consumption. As the country's poor, you don't eat a lot of protein, you eat a lot of starch. And then eventually, as you become middle class and then ultimately wealthy, you increase your protein consumption tremendously. And one of the big drawbacks of protein consumption, specifically animal protein, is that it requires huge amounts of grain for that to take place. And so what's happened over the last 20 years, like if you look at total grain consumption between say 1980 and 2000, that last 20-year stretch, global grain consumption was basically about 1.25% per year, or basically in line with global population growth. However, from 2000 to 2020, basically grain consumption has gone from 1 to 1.25 to over 2 to 2.5%. We basically doubled the steepness of that line. And that's because of throughout the world, this entire emerging market phenomenon. People are getting more wealthy, and they're changing their diets. So you have a very, very strong underlying demand trend at work in global agricultural markets, global grain markets. At the same time, this is very, very controversial, and I don't want to be braided a nut on this. The thing is, we believe that we're on the verge of a big change in weather cycles, and I know this is completely contrarian and not accepted by most people. But the thing is that we believe that we're actually entering into a cooling cycle now, as opposed to the last 50 years where we've been in a warming cycle. And this is something that people will not agree with us on either. But we'll be the first to. We want to say that the global the warming cycle that we've experienced in the last, especially in the last 30 years, has been a huge positive to global agricultural markets, not a negative. And why is, so much of our grain comes from the northern hemisphere, and a warming climate means that we have, the growing season lengthens. We have far less severe frosts in the late spring, and we have far less severe frosts in the early fall. And so that is, there's a lot of factors that have gone into global grain yield increases in the last 40 years. But I would say, our research says that a good chunk of that comes from the lengthening of the global agricultural growing season. So if we're changing we're entering a period of much more adverse weather in global growing crop conditions. At the same time, the global grain demand still is growing very strongly. You're going to wind up in a situation where at some point there's going to be some sort of weather event on a global basis that really puts a huge amount of upward pressure on grain prices. We're beginning to see that already. Obviously Brazil has gone through close to a year and a half of very, very challenging growing conditions, there's other places I can name as well. So we seem to be entering this period of much more challenging weather conditions. At the same time, grain is growing. Demand for grain is growing very strongly. The way we love to play it, we love the global fertilizer industries. And you have something else going on in the global fertilizer industries as well. First premise is grain prices go up, farmers' disposable income goes up, and what does farmers do? They go out, they want to increase their application of fertilizer to produce more grain in order to increase their yields. So every farmer does that at the same time. So all of a sudden, the amount of fertilizer demand increases as grain prices go up. What's happening now as well is because, remember, most of the fertilizer business in the world is very, very energy intensive. And like, for example, urea, which is the solid form of nitrogen as opposed to ammonia, the gas. China produces close to 50% of the world's urea, and 70% of that urea comes from coal. Literally, what they do is they produce a syngas, which is then manufactured into solid nitrogen form urea. So, and China has already put restrictions on urea production because of the energy crisis that's developing there. And phosphate's the same way. China produces close to 70%, 60% of world phosphate, and the production of phosphate into fertilizer form is very, very energy intensive. So they've put restrictions on that as well, and they put on export bans on these fertilizers. So not only you have high grain prices, which is going to mean strong underlying demand anyway, then you have a supply issue being developed because of the energy crisis and what China is, the way they've initially decided to handle it. So we're very, very bullish on grain, global agricultural markets. We love the fertilizer space, and these stocks are very, very cheap, and there's no interest in them whatsoever.
Very insightful, Leigh. Thank you for sharing. Maybe for Adam, Fukushima seemed to be the final nail in the coffin for the nuclear industry, about a decade ago? However, you appear to be very constructive on the future of nuclear power and uranium extraction. How so?
Well, there's a few different things, and I'll get into each of them. And you're right, following Fukushima, that has been a relentless bear market that's lasted 10 years now. And really, actually, uranium prices were falling a little bit before that. And peak to trough, uranium fell by 90% from about 150 down to 16 or 17. And it fell over more than a decade. So any way you cut it, a serious bear market. We like to invest in what we call unsustainably low commodity markets, and uranium definitely fits the bill. What do we mean when we say unsustainably low? Well, by the end of this bear market, there's only two companies producing uranium in the world, Cameco and Kazatomprom. It was a duopoly. They still couldn't make any money, and they actually ended up shuttering their flagship operations, each of them, and reducing capacity because they couldn't even break even on a cash cost basis. That's a great commodity market to get involved with right on the outset. So, you had this huge bear market. There's been not a nickel invested in the industry for over a decade. But why do we think that that's going to change? Well, simply put, if you're going from fossil fuels to renewables, you're taking a massive step back in terms of energy efficiency and surplus energy that we can then use as an economy to make things and grow. If you go from fossil fuels to nuclear power, you're taking what I would say is conservatively the biggest step forward in terms of energy efficiency since the early 1600s. And that's no small statement. What happened then in the early 1600s, basically prior to that, for thousands and thousands of years, the only energy that we ever used as a planet came from food and a little bit of wood. And food was for ourselves and for the animals that we used to help power the farms and things like that. And obviously wood was then used for heat as well as for a little bit of charcoal. England clear cut most of their forests by the early 17th century, and they moved to coal because that's all they had left to burn. That was like a 3 to 5 fold increase in energy efficiency, and that brought about basically the modern world we know today. Everything up until that point managed to grow a whopping 0.04% per year GDP. Since then, it's increased 55-fold in 350 years. So, you've had this massive step change. Uranium compared to fossil fuels is the same as fossil fuels compared to wood and food. And so we stand potentially on the cusp of this major positive event taking place. But on a shorter term basis, even I admit that we're long-term investors, but thousands of years is probably too long for us. So if you want to take a shorter term view, on the demand side of things, you really have two things. You have the emerging markets, and that's always been what our strong bullish thesis on uranium has been based on, the emerging market demand for nuclear power, predominantly China, but also in India, also in parts of Saudi Arabia to help free up oil for export capacity that they're burning for electricity there, but mostly China and India. And if you just take that demand in and of itself, that's going to overwhelm the mined supply of uranium that's already happening. And the reason, of course, is that we haven't invested in the global supply of uranium now for over a decade. So that has always been the incredibly bullish story. But now something else is happening because Western perceptions about uranium and nuclear power are beginning to change. That's never been part of the bullish story. We frankly thought that, you could have almost no interest in uranium and nuclear power in the West, and still this China-India story would overwhelm mine supply. However, things are starting to turn very acutely in parts of Western Europe, in the United States, and it's moving very favorably towards nuclear power and uranium. Still controversial, but you have people like the New York Times and other very liberal news outlets that are now starting to say, hey, wait a second, if we really are serious about reducing CO2, we probably need to find a baseload source of power that doesn't emit carbon. And the only one that does that is uranium. People have not yet woken up to the fact that it also is much more energy efficient than any type of energy we've ever used, meaning it'll create huge surpluses of both excess energy and then capital. That yet has not been fully appreciated, but people are beginning to realize that if we want to go to a zero CO2 type of a power grid, and we want it to be uninterrupted, uranium probably has to play a big role. So we're starting to see a big sentiment shift in the United States and across Western Europe as well.
I think it's interesting. There's two factors. I mean, there was a very interesting article on the front page of the New York Times. I believe it was over the weekend that said in France that I ironically back in November of 2018 was in southern France at the eruption of the Yellow Vest movement that took place. I was right in the middle of it, so I got to see, the anger of the local population regarding, Macron put a tax on diesel at the time. It sparked the whole thing. But now there seems to be another budding movement of the yellow vest movement in France. And what are they upset about? Again, they're upset about high diesel prices again, but they're also upset about what's happening to their countryside, in the sense they have this, some of the most beautiful countryside in the whole world, and you're basically defiling it with all these massive wind farms all over the place. It's so interesting. I was in France just a couple of weeks ago, in northern France, and they're building these wind farms all over the place, and they're ugly as can be. And that, and people in the Dutch have realized the same thing. They said, we have this beautiful country, and why are we marring it with these incredibly, invasive eyesore, structures, which, by the way, don't solve the problem. So there's a movement in the West that, maybe nuclear power should be really considered. And the other thing is that I think this is, we keep bringing up this energy efficiency, kinetics, and things like that. Say we have a CO2 problem. We have to solve the CO2 problem. Are you going to solve it with a technology where you put in 1 unit of energy and you get out at best, at a solar farm, you get out maybe 2 units of energy at the side? An offshore wind farm, maybe you get out maybe 10 units of energy out the other side. Or do you invest in a nuclear power business where you put in 1 unit of energy and you get 100 units of energy out the other side, and you produce no CO2? Those are phenomenal numbers that most people don't really understand. And maybe that we'll realize that, okay, so we can't build a huge 1,000 megawatt, 2,000 megawatt type nuclear power plants for a variety of reasons, but maybe we'll go modular, and that'll solve the problem, or the perception problem of it. So the future of nuclear power could be phenomenally bright.
Maybe one follow-up on uranium. We've had a couple of economists and general investment thought leaders, Lynn Alden and others, also mention their perception of part of the commodity play, that uranium could be an interesting play. But I don't think we ever really went into, like, how are ways that family offices could gain access? Is there an ETF? Are there specific stocks? Are there other ways to play the uranium game?
There is a uranium ETF out there, and I don't follow it very, very closely, but it is available. And there are a number of uranium stocks.
Right.
We have about 20% of our portfolio in uranium.
Wow.
So our fund would be a way to play uranium. So there are a number of ways, and there are 2 big producing companies out there that are both very, very high quality. They've run here significantly in price, but I think that they will continue to be good investments as we proceed through this decade. And for those that are more of risk-taking mode, there are a number of smaller exploration uranium companies that have, some of them do have various good potential prospects that do require higher prices, though, than what we have today in today's market.
Good point. And maybe a little bit of a, going back to you, Adam, we mentioned the word lithium as, of course, in quote unquote battery manufacturing. Could I make the argument that lithium is not as clean as people may think it is, in terms of the mining of it, if that's the correct word, is dirty? I don't know if it matches 1-for-1 with traditional petroleum, but if you, and I know this is another sensitive topic, but if you wanted to jump into it, I'd love to listen.
Yeah, absolutely. I don't mind jumping into it at all. And I think that there's absolutely no reason why it should be a sensitive topic. Lithium-ion batteries are horribly energy intensive. They require a tremendous amount of energy to manufacture. They have always been, if you go back and you look at the history of lithium-ion batteries, they are very, very high performant. And that's always been their big appeal, which means that they have been typically reserved for very specific uses and very, very high value add uses, things like a camcorder, digital camera, or a laptop. Now, what is it about those things that are particularly interesting, and what are the potential challenges to the way we're thinking about lithium ion? Well, just think about them. They're not very big, and they tend to have a 3 to 5 year lifespan. And it's that last one that's critically important, because lithium ion batteries die after 3 to 5 years. They die after a certain amount of life cycles. And people pretend that that's not going to be a problem, and they pretend that that is not an issue. And I would just say, we all have an iPhone. We all know exactly when they stop working. It's always after about 3 years. It's actually not a unit of time as much as it's a number of recharge cycles. It's about 600 recharge cycles before you start to get massive degradation from your battery. And as of right now, it's extremely difficult, and I would even go so far as to say not possible, to recycle lithium-ion batteries. The chemistries are very, very complicated in terms of being able to liberate the individual metals involved. So the question then is, okay, you have this product that's extremely energy intensive to manufacture. It's incredibly energy intensive to mine lithium, cobalt, nickel. It's extremely energy intensive to actually manufacture the cell. So even once it's been mined, bringing it together, you basically have to put it into a paste type slurry solution, which is a lot of water, and then you evaporate out the water. So people say, well, can't we get more efficient? I mean, boiling water is boiling water. It requires a certain amount of energy to help reduce and dry out things, and that makes lithium-ion battery manufacturing very energy intensive from soup to nuts. And then if that would last you forever, that would be one thing, but it lasts you about 600 recharge cycles. And so for a lithium-ion powered car like a Tesla, that's a little bit longer than because you're not taking it down to a full decharge every day the same way as you are your phone. However, it's still very, very finite. And so you can just amortize that energy over the life of that battery, and it is not a pretty picture. So lithium-ion batteries are very, very, very problematic. They should be kept as small as possible. They should be reserved for things where we really need big energy density, where having a few extra hours on our phone is important. And then most importantly, they should be kept until they're absolutely no longer usable, because it's very costly and energy intensive to make another one. But that's not the way that we seem to be operating things today. So yeah, lithium ion is not the panacea here. People talk about lithium ion to back up grid level storage, to do things like wind and solar. I mean, that's nonsense. And what I tell people is that's like the equivalent of trying to put a Ferrari or Lamborghini engine into a tractor. Doesn't mean that it's not a good engine. It's just not right for that source or for that task. And it's the same thing. It's lithium ion batteries are good to have a huge amount of energy per unit weight, and to be able to pull on that battery very quickly to get your Tesla to accelerate. They're not good for long, sustained, multi-hour, 8+ hour decharge cycles, the likes of which you would need for the grid. So people think that batteries, are this big solution, and they're not. And one thing that I would also just point out, you talk about wind, you talk about solar, you talk about lithium-ion batteries, and I'm here to tell you that all three of those, they require so much energy. Now, is it any great wonder that the cost of them in dollars has fallen so dramatically over a decade, where energy prices have fallen so dramatically?
Mm-hmm.
Gas prices have fallen 90%, oil prices have fallen 90%, uranium prices have fallen 90%. And then look, wind, solar, and battery prices have fallen, not 90, mind you, but probably 60%. And everyone thinks that that's because we're getting better at making these things. But I'm telling you, it's because the number one input component to all renewable energy and batteries is energy. And that's gotten a hell of a lot cheaper. So going back 6-8 weeks, the price of coal in China jumped, the price of solar panels jumped. What was it, Leigh? 5-fold in a matter of a couple weeks. It's no surprise.
Since you brought it up, I'll bring it up. Listen, I think the world of Elon Musk, an extraordinary entrepreneur. SpaceX, Tesla, Starlink, what am I leaving out? Solar City, just everything. We're so lucky that he's based here in America, and I look forward to many more amazing things to come. And I love Tesla, and it's been not only a good performing stock for me, but I love the car. But going back to the lithium battery, and not a little more dirty than probably quote unquote what people think, I mean, what is Tesla? Is it really more of an energy storage company? And this brings up the whole issue of, I guess you could say, would Tesla be Tesla if it wasn't for government subsidies? I would assume not. Uh, Again, another touchy subject for some, but I would love to hear your opinion.
Oh, you bring up, Angelo, so many fascinating things in what you just said. And uh, one of the interesting things about the history of energy is that if you go back and you look at new technologies and why were they able to displace old technologies, the answer, and this is true in everything, it's because the energy efficiency of the new technology was much greater than the energy efficiency of the old technology. And I'll give you a couple examples of that in a second. But the thing is that that the energy efficiency of electric vehicles, this is very controversial, but Adam and I have done a lot of work on this, doesn't compare at all with the energy efficiency of an internal combustion engine when you fully incorporate all the energy that's required, including all the energy that's required to produce the renewable electricity that goes into that car. And then you have to add on to that the whole energy that goes into the making of the car itself, specifically the batteries. Now, when I'm talking about displacement of old technologies with new technologies, here's a great example of where it worked and where it didn't work. Pre-1958, I believe that close to 85%, 90% of all travel between the United States and Europe took place on the ocean. Through ocean liners. Then in 1958, you had the introduction of the Boeing 707 that brought in the jet age. The energy efficiency of flying one person across the Atlantic 5,000 miles versus transporting the boat was like it's hard to believe, but it's literally it's 4 times more efficient to do that than sailing across in an ocean liner. So what happened by the mid 1960s? All of a sudden, ocean traffic across the Atlantic fell by 90% and was replaced by jet traffic. Now, what's interesting, in the late 1960s, you had the introduction of a whole brand new technology in airline travel. That was the supersonic transport that was developed jointly between the British and French governments. And the Concorde was a true technological marvel. That here you had, at the time, basically the best you could do is fly 1 or 2 people supersonically. Here, all of a sudden, you built a plane that could literally fly 100 people at supersonic speeds. And the Concorde was a huge leap in technology. However, the Concorde had much inferior energy efficiencies versus its competitor at the time, which of course was the introduction of the Boeing 747. For example, a Boeing 747 could take 1 passenger across the Atlantic. 1 gallon of fuel could produce 50 passenger, could push that passenger 50 miles. The Concorde was literally 1 gallon of fuel could only transport that passenger, I think, like 10 miles, something like that. Much inefficient energy efficiency. So here you cut travel time in half, things like that. And what eventually happened to the Concorde? It ultimately went away. It was subsidized for years by the French and British governments, and eventually it couldn't compete, and it just disappeared. And why did it disappear? Because its energy efficiency could not displace the superior energy efficiency of the previous technology. Now, it's interesting, in the end, who are the users of the Concorde? I would say they were rock stars, investment bankers, and Hollywood celebrities. Doesn't that sound a little bit like who the people are buying Teslas today? Well, it turns out that Tesla, on an energy efficiency basis, like I just described with the Concorde versus the internal combustion engine, is not that it's not that dissimilar. And so the thing is that yes, there's a market for it, but will the average person in Europe and the United States go out and buy it? I mean, look at it this way: a Nissan Leaf costs you $40,000. the same size car, Nissan, would be the Sentra, and that's $20,000. Now, the Nissan with a non-upgraded battery, I think it's 200 to 220 miles a charge or something like that. The Sentra could get close to 350 to 400 miles per tank refill. Is somebody going to spend twice as much for all the agitation of an electric battery that is recharging, range anxiety and things like that, versus a car that's half the price? So that's when I talk about energy efficiency. That's how it reflects itself today, the EV versus the internal combustion engine. And those economics aren't going to change because the underlying energy efficiencies aren't going to change. And so that's the problem. So the future of the EV, it's going to take place in two forms. Governments are going to outlaw the internal combustion engine, or they're going to heavily subsidize the EV purchase, which of course, all these new transportation infrastructure bills and things like that have huge subsidies for EVs.
And it just popped in my head as you were talking. What is the future of hydrogen in energy?
Oh, Adam can answer that.
So hydrogen has no future as far as I'm concerned in energy, or very limited in ways that even frankly people that talk about hydrogen today aren't talking about. Most people talk about hydrogen today as a form of transportation fuel, and I think it just has no business. We have no business even talking about it. And the reason is that hydrogen is not found in nature, which means you have to manufacture hydrogen. And anytime you talk about having to manufacture something that ultimately will create energy, usable energy, I think the first question should be, how much energy does it take to make hydrogen? Because if it takes nearly as much energy as what you will be ultimately releasing later, you're kind of at a wash. So there's two ways to make hydrogen. The first way to make hydrogen is through taking natural gas or coal, if you wanted to, and actually taking those hydrocarbon chains, which are made up of hydrocarbons, hydrogen and carbon, and breaking the chains and taking the hydrogen. So you can do that. The problem with that is that you have as much CO2 as if you just burned that hydrocarbon to begin with. So I don't know that that's necessarily a good way of moving forward. What people really talk about, though, when they're talking about hydrogen is the idea of green hydrogen, which is to say we'll take solar and wind. No one talks about nuclear, but solar and wind, which is to say, no CO2 emitted electricity, which I don't believe is actually true, and we'll then use that to go through an electrolysis process whereby we split water into hydrogen and oxygen, and then we'll take off the hydrogen, compress it down to a gas, move it around in pipelines, and go through a fuel cell and recombine it with oxygen, releasing electricity when we do that. The problem is that when you do that whole process, okay, you're starting with wind and solar, horribly energy inefficient to begin with, and then to do that entire hydrogen cycle, you lose up to 70% of the meager amount, or the hard-fought electricity that's coming out of the wind and solar. You then lose 70% of it. So it's akin to operating with a bucket that has a big hole on the bottom, right? You're losing 70% of the energy in the whole ecosystem. It can never compete in an energy efficient manner. You have a really inefficient source of power, then you lose another 70% of that going through the hydrogen fuel cell cycle. We've talked to people, we were keen insiders into the energy transition business, both consultants and management. We say, what about the fact that you lose 70% of the energy? And they all say the same thing, which is, don't worry about that. People want this stuff. So look, maybe that's true, but to me, that's not an investment case. When you have something that is fundamentally doesn't make a lot of sense, that's not something we want to be involved with. And that's hydrogen in a nutshell.
I have three final questions. We'll be a little mindful of time and your schedules. Why don't we go a little lightning round on them? Will we see $100 a barrel in oil this year and perhaps $200 in 2022?
There's a high probability that could happen, and there's two factors at work here that I think are poorly understood. One is that we talked before, like the problems of the super majors and the problems of the growth in non-OPEC oil supply, which is now probably we don't like to admit this, but it's probably turned negative. And remember, the biggest competitor to OPEC oil is non-OPEC oil. And if non-OPEC oil slows, then all of a sudden OPEC gains market share and pricing power. And that pricing power has already started. And I talked when we started our podcast today, I mentioned about how the Biden administration has already gone to OPEC not once, but twice and asked them to produce more oil. That's pricing power. And OPEC said, we'll think about it, and didn't do anything. So the thing is that, that's what's pushing up oil prices today. OPEC has pricing power. Now, there's something going to happen in global oil markets based upon our modeling, which almost no one talks about, is that for the first time in the history of oil, and we're talking all the way, go back to Colonel Drake in 1858, Oil City, Pennsylvania, and things like that, global oil pumping capability has always vastly exceeded global demand. And we've never been in a situation where global demand actually got close to global pumping capability. Our modeling says for the first time in the history of oil, we could very well hit that unprecedented crossover peak at some point in the fourth quarter of 2022. And we've never been there before. So the thing is, you combine OPEC's gain of market share and pricing power with the idea that we're now going to, for the first time ever, bump up against total OPEC, a total global pumping capability, which that includes all OPEC's spare capacity. So there's a chance that oil prices could have a runaway to the upside. Is that unprecedented, or is that impossible? Well, think of it this way. Obviously, this whole global energy crisis, which is going to be in a rolling fashion for years and years and years, has already manifested itself in Europe and in Asia, in the natural gas markets. And earlier this year, we saw natural gas prices in both Asia and Europe surpass $35 an MCF. Well, what is that in a barrel of oil equivalent terms? That's $200. That's $200 oil right there. So can energy prices get that high? Natural gas prices got that high. So it's a possibility. And it has to do with OPEC gaining market share and pricing power, and finally the idea that we're running out of global spare pumping capability.
Very good insight. Regulated carbon pricing is well established in Europe. Can voluntary carbon markets create the required economic signals to meaningfully influence reductions in emissions?
Want to take that, Adam?
Look, I think I'm going to dodge the question a little bit and answer it in a little bit of a roundabout way. If you implemented really strict carbon pricing, everyone thinks that that's going to push everyone towards wind and solar. But if what we're telling you is correct, then wind and solar, unless they're given special exemptions from having to pay for carbon, actually create a lot of carbon through pouring the cement and creating the steel that goes into them. And since the full cycle energy efficiency is not very good with wind and with solar, yes, they don't emit any active carbon when the windmill blade actually turns, but people seem to forget the steel that sits on top of and the cement that sits on top of. And I don't know why, we have such a difficult time sort of fully loading those different costs. And so given the fact that it's not very energy efficient to begin with and the huge amounts of cement and steel that need to go into that, if you start to aggressively price carbon, what you will end up doing is actually pushing a lot of that wind and solar out of the money. So I suppose if you wanted to have a really well-regulated, globally coordinated carbon pricing system and then exempt the things that you want exempted, I suppose that might move us away from oil and gas. But I think ultimately what it could risk doing, which I think ultimately would be a huge positive, would be to show the fallacy of a lot of the wind and solar and battery backup for what it is, which is to say quite carbon emitting in and of itself. I think, I'll stop there.
Well, it's interesting. Obviously the production of carbon is considered your classic economic externality. and the idea to try to, it's a cost, it's an external cost. If you try to internalize that cost, the best way to do it is through some sort of carbon pricing, carbon, a carbon tax, things like that. So that's good, but it is very interesting. We've talked to, when we meet people, we bring up the idea of, people will actually say, oh, well, this will bring wind and solar into the money. We said, like, what are you talking about? Because the carbon production, as Adam just mentioned, for these new technologies is huge. And so, if you properly price their carbon as well, they're not going to go in the money.
And it's front loaded.
Yeah, it's front loaded. And the response is, oh, we'll just have to exempt them from it. They don't even think about that. When you say that, they said, oh, well, we'll just have to exempt them from it. And then you're getting into all sorts of political issues, like who gets exempted, doesn't, and how do you exempt that? Do you exempt you exempt the copper mining that takes place in Chile? And how do you try to divide how much of that copper goes into a windmill versus how much it gets put into the building of a new house? So the thing is, it's famously complicated. But the only way, if you properly account for it, and you have a carbon tax that applies to everything, it shoves, it continues to shove things like wind and solar farms out of the money, because they're huge carbon producers.
It'd be a big boon for nuclear.
Yeah. Yep.
Final question: can you share some technology breakthroughs that you can both see as meaningfully contributing to net zero and your portfolio performance?
Sure, I can take that. So look, I think if there's any single big picture, the more work we've done on this, and we've done years and years and years of work deep into this, and I think it's funny because we have oil and gas in the portfolio, and I feel like sometimes a skeptical audience might think that means we're not paying attention to things like carbon, but it's quite the opposite. We're paying more attention to it than anybody. We just have some different conclusions, but they're incredibly well thought out. So after having done this for years and years, the one thing that's going to make a big difference is if we can get our arms around nuclear power. And I know I sound like a broken record. We've talked about it 3 or 4 times, but it ticks 2 major boxes, and we're challenged to even tick one of those boxes today. It's energy efficient, and it emits no carbon. So, I mean, the first thing that we need to do, if you want to talk about, helping the world move forward per unit of time, let's just push on people to really get educated about the safety of nuclear power, because that would make the biggest difference. Outside of that, I think that looking at EVs and looking at transportation, automotive transportation, is a really strange place to start with carbon. And the reason that is if you look at personal car transportation using internal combustion engines, that represents about 9% of global CO2. It's an intensely personal decision. A car is most people's probably second most valuable purchase. People feel very strongly about them. They have real concerns like range anxiety and real issues about how much carbon you're actually able to save. And even if you were to save all of that carbon, that's 9%. Now you're not going to do that, right? On our most conservative estimates, going from, when I say conservative, I mean, giving EVs every benefit of the doubt, maybe you're talking about 15 to 20% CO2 savings over the life of an EV compared to internal combustion engine. How long is it going to take to get to 100% EV sales? At least probably 15 or 20 years, and then another 10 years after that to replace the fleet out. So you're talking about somewhere in 2050 replacing 15 or 20% of 9%. This is not going to move a needle any way you cut it. Today, steel represents 10% of global CO2, and there are techniques and technologies out there that can produce steel without emitting CO2. Now, unfortunately, some of those technologies that have been put forward, they require more energy than the typical blast furnace. And so that, to me, is a really murky area, because you're trading off energy efficiency for carbon. However, there are some technologies that are out there as well, which I'm very intrigued by, that actually can create steel with no CO2 emissions and consume less energy than the typical blast furnace. And that is what people should be focusing on. It's a private company. It's not yet available, in public form, but it goes by the name of Boston Metals. They just raised money from BHP, Vale, and BMW. And to me, that's probably that nuclear energy, we could address 50% of the world's CO2 overnight.
Wow, very good insight.
Yeah, it's also, another interesting short-term solution to the whole problem. We don't underestimate how natural gas can be used to reduce global CO2. Remember, close to, I think it's 45%, 50% of all CO2 in the world comes from electricity generation, primarily through coal. And by displacing coal with natural gas, you basically reduce the CO2 output by almost 50%. And here you have this engine number one who's in the process of trying to really disrupt what Exxon's doing. There's a rumor they're going to try to cancel these two massive natural gas projects, one in Mozambique, one off Vietnam. Those projects themselves are part of the CO2 reduction problem. For example, Vietnam today produces, I think, half their electricity comes from coal. They say they want to, by the next 10 years, they want to have 80% of their production generated from natural gas. And that natural gas is going to come from that field off Vietnam, which Exxon's going to be developing, which engine number one is trying to stop developing. And India is the same way. This massive Mozambique LNG projects, a huge amount of that LNG is going to go to India. India, which produce, again, I think 50% or 55% of their electricity is generated from coal today. Natural gas is like 5 or 6%. They say by 2030, they want to go to 15% natural gas. That will displace the coal. That gas is going to come from those Mozambique LNG fields. And that's another project that Exxon is being forced to potentially abandon. And so the thing is that we're going down roads that we don't even understand. And what are we trying to accomplish? It's not clear. So those are good examples. Nuclear power and try to encourage as a bridge fuel natural gas, but we seem to be doing just the opposite.
And as wrapping up for those that would like to learn more about how to connect with you, what I will do is I will give spellings. This will challenge me of both names. So Leigh is Leigh, last name pronounced Goehring, spelled Goehring. Adam, I think we could all spell that one, but I will have to spell Adam's last name, R as in Robert, Osencwajg. And firm of their same respective last names. Gentlemen, for those that would like to learn more about how to invest in what you're doing in your fund and potentially, again, I'm assuming accredited investors and above, connect with the firm, how could they do that?
Okay, go ahead, Adam.
No, first of all, I was going to say, we do have a mutual fund, so we welcome retail investors as well as institutional investors. We do have SMAs. As well. And everything that we talk about is available on our website, GoRozen.com. We put all of our research and all of our content is available for public consumption and dissemination. We welcome people to take a look, and please reach out with any questions that we're open and as you can tell, love to talk about this type of stuff.
And is there specifically, again, a website, if you could repeat it?
Sure, it's GoRozen.com, and that has everything to do with Goehring and Rosencwajg. And the nice thing about a name like Goehring and Rosencwajg is by the time you're halfway through typing it, there's really only one of us that's out there. There's not three similar sounding. So.
Yeah, that is true. As you're even checking it up on Google, that would be an easy way. And I'm assuming from the website, if there was an interest in connecting, there's a way for investor relations or something like that to connect.
Yeah, absolutely. There's lots of different links. info@gorozen.com will come straight to me. There's several places that you can sign up for.
Are either of you active on Twitter or any of the social media platforms?
We are. Yeah, we are. We put out a weekly blog, and that goes out across the social media platforms as well. So our Twitter handle is go_Rosen, I believe. and on LinkedIn under Goehring and Rosencwajg or under myself. I don't think Leigh's on LinkedIn, but that's okay.
I'm not.
Leigh doesn't want to be bothered by all that shit. It probably helps him. You can stay focused on doing your research and your work. On that note, everyone, as I close, I hope you enjoyed today's discussion. I found it very valuable. Like I think I've said before, my real purpose of doing many of these interviews, honestly, is for me. I want to be curious and learn more, and hopefully I take action on the right things. We'll see. I will note, because there was an investment theme that I guess we were discussing, that I will remind people that everyone has a different risk tolerance, available capital, liquidity needs, what makes them sleep well at night. Everyone is different. We do this for engaging entertainment and somewhat educational purposes, but for the purposes of investing, your situation's different. You should think for yourself. You should make your own decisions. And this is the opinions at this point of time in mid-November. You may hear this a year from now. Things could be completely different. So again, really look at it at the point in time, and educational and probably equally entertaining perspective. And I hope you had a chance to enjoy it. When you invest, there is always a risk. You could lose money. I guess in theory, you could lose all your money. So those are things that you need to be mindful of. Everyone, I'm Angelo Robles, the host of the Angelo Robles podcast and the founder at Family Office Association. Check us out, become a member, familyofficeassociation.com. My direct email is on there as well. I'm very active on social media, especially on when my alarm's not going off on YouTube. Simply, we're Family Office. You could follow us, lots of content for free. So we do give away hopefully some good content. And on that note, it's time to say goodbye. Gentlemen, again, Leigh and Adam, thank you so much for your time. And thanks to our good friend, David Talbot at Accordia, for putting this together and making it happen. Have a great day, everyone.
Very good, Angelo. Thank you very much for having us on. We really enjoyed it ourselves. Okay, bye-bye.
Thank you, guys.